Welcome to Standard Chartered India Money Insights, a podcast series that brings you topical insights and local perspectives on India's markets from the experts.
Hello everyone and welcome to another edition of our weekly podcast. My name is Ravi and I'll be your host for this episode. Global equities staged a broad-based recovery from the lows hit last week, supported by improving expectations of Fed policy easing over the coming week amid softening US retail inflation and weak jobs data, while the European Central Bank cut policy rates by another 25 basis points in its last policy meeting. Major equity benchmarks in the US, which include the S&P 500, Dow Jones Industrial Average, and Nasdaq Composite, rose around 3 to 6% over the past week, reversing most of the losses incurred last week. Asian equities continued to trend mixed, with markets like Singapore and Taiwan rising by 3% and 2%, while the China onshore markets fell 2%, Thailand and Hong Kong incurring a loss of 1% over the past week. China's economic data showed sequential moderation, with retail sales and industrial production growth easing sequentially, while wholesale price inflation contracted. Back home, Indian equities recovered from past week's losses. The Nifty index scaled new all-time highs, up around 2% for the past week, driven by upbeat global sentiments ahead of the US Fed meeting and robust foreign investor inflows. Broader markets performance remained mixed over the past week, with the Nifty Midcap Index up 2.6%, while the Nifty Small Cap Index was up 1.2%. Among sectors, all sectors ended the week in green, with telecom and FMCG leading with gains of over 3% for the week, while the energy sector ended flat. The Indian fixed income market had a decent week, with Indian government bond yields declining across the curve, tracking a decline in US bond yield amid expectations of a potential US Fed rate cut in the coming week, and the RBI cancelling further borrowing via Treasury bills for the whole of the month of September. The yield curve flattened a bit as the 10-year Indian government bond yield fell 7 basis points to close at 6.79%, while the 3-year and 5-year government bond yields fell by 2 basis points and 5 basis points respectively. The INR rose 0.1% against the USD over the past week to close at 83.88 per dollar, supported by a weaker US dollar, lower US bond yields, and strong gains in domestic equities boosted by robust foreign investor inflows. INR gold rose 1.6% over the past week as bond yields declined. Brent crude oil recovered from a near 3-year lows on Thursday amid supply fears after Hurricane Francine hit in the US, but pared gains later to settle at $71.6 per barrel as US CPI inflation eased sequentially and data showed a rise in US crude oil inventories. Coming to macro updates for the week, the first was on India's consumer price inflation, which rose nearly 3.65% year-on-year in the month of August 2024 from an upwardly revised 3.6% recorded in the month of July and above consensus forecast of 3.55%. This was the second consecutive month that inflation stays below the RBI's target of 4%, however driven largely by base effects in food article prices. The cost of food articles, which represents nearly 46% of the Indian consumer basket, rose by 5.66% compared to a 5.42% growth recorded in the previous month. Pulses and products and vegetables recorded significant surge, while tomato prices fell sharply. Prices continued to decline for fuel and light and stayed flat for housing. On a sequential basis though, CPI inflation remained unchanged. The second data was on India's industrial production, which grew 4.8% year-on-year in the month of July, beating market expectations of a 4.7% growth and a 4.2% growth recorded in the previous month. Manufacturing output, which accounts for nearly 78% of the total industrial production, expanded by 4.6%, with notable growth for electrical equipment, fabricated metal products, except machinery and equipment, and other transport equipment. Moreover, output for electricity and mining rose by 7.9% and 3.7% respectively. The third data was on India's forex reserve, which improved further. The FX reserve stood at USD 689.2 billion for the week ended 6 September 2024, recording a rise of nearly USD 5.2.5 billion. This was primarily driven by a surge in foreign currency assets, which rose USD 5.1 billion during this period to stand at USD 604 billion. Over the past 12 months, India's FX reserve have risen by about USD 95 billion. At this point, I'll take a pause and thank you as always for listening. If you enjoyed this podcast, please like and subscribe. Have a great week ahead.
Thank you for listening to Standard Chartered India Money Insights. Stay tuned for the latest updates and market trends by subscribing to our podcast. For more information, reach out to your Standard Chartered Relationship Manager or visit www.se.com/in.